trading has been with us for quite some time now. Ever since the currencies are really in free flow against one another, people actually found a lot of opportunities, a lot of chances where they can actually leverage on the differences that are appearing between the prices or the values of different currencies. Now, we know this for a long time from, let's say, Forex markets, where people are trading anything from dollar to euro, then dollar to New Zealand dollar, and so on and so forth. Now, ever since cryptocurrencies are around, this is actually also possible, of course, in this sort of market. One thing that is actually quite difficult for people to understand is, and this was also one of my first thoughts when I was introduced into Forex market, is that how can I actually make money when something is losing in value? And this was, a lot of people actually compared this to, I don't know, scams. A lot of people compared this to, something that is unrealistic, just, rich people getting richer, poor people getting poorer, and so forth. But, the concept is actually quite simple. In the previous course, we already explained, that all of the currencies actually have to come in pairs. Now, what does this mean? We cannot compare price of one thing if we don't have the price of the other. It's very simple. We always know that, let's say, 1 gram of gold is worth this many dollars. I mean, this thing is, of course, fluctuating, and the value is changing all of the time, but then we do need a counter value. In this case, we're talking about gold against dollar. We can also have gold against euro, or we can have euro against dollar, dollar against euro, and so on. So all of the currencies have to be presented in pairs in order for us to evaluate the price. Now, ever since, of course, Bitcoin came into the market, we had to compare the price or the value of Bitcoin against something else. Now, initially, this was, of course, against the dollar. Then later on other exchanges also enabled other currencies inside, let's say euros, in some specific countries, of course, against their home currency and so on. So really, this is where the opportunity for the earnings, this is where the opportunity for people to invest appeared. Now, when it comes to Forex, Forex is just short for foreign exchange. Foreign exchange, it means different currencies are trading one against another. And this is, initially Bitcoin was not really on Forex. It was just, being able to sell or to buy. Speculations started to appear when the liquidity and when the really the volume of all of the trades daily reached a certain point. This is where bigger players could actually enter the market. This is where more and more activity started to appear. For some time now, some of the platforms like Kraken, like Bitfinex, like Poloniex, for example, these platforms are enabling us to trade cryptocurrencies like we are trading other currencies in the Forex market. Now, there are a few crucial factors that are actually quite important for this sort of trading. It means that, once we trade on Forex, we never actually exchange one currency for another. We're just actually opening positions. Now, opening positions, this means we can either go long or we can go short. We already explained this in the previous videos, but this is actually very important for any of the investors to understand the basic concept of going long or going short. So for investors, it's actually very important to understand the concept where, let's say, we have Bitcoin against dollar and we are going long. This means that we're actually leveraging on the fact that Bitcoin is going to grow against dollar. We can always turn the concept around. We can say, okay, we can go short, which means that dollar is gaining value against Bitcoin. This means Bitcoin is actually losing value. Okay, so we can make money either way, but we have to be in the right position. So when we are trading in Forex, we're not buying Bitcoin. We're not buying some other cryptocurrency. What we're actually doing is we are buying a position. We are actually opening a position that is going to make money whenever there is a difference in price between the currencies that we have, that we have chosen.